Hello, everyone. This is today is August 10th, 2022. Today we had inflation numbers at 8.5%, and stocks exploded. And it was a summer day where they just decided they needed prices higher. The current S&P is about 4,200. My two friends, excellent friends, Peter McEwen and Ben Ryan. And Ben comes from the floor background. I knew him as a gold trader. I traded in the indexes, but Ben and he would come over and ask me what I thought, and I would run my cap flow stuff, and show him, and he would go back to trading gold. And every now and then I'd go over and look, and Ben was an incredibly big trader with multiple positions and understood options very well, and has some funny stories to tell all about gold. And Peter, of course, is our resident sort of, how should we say, our
tantric master.
Yeah, I was going to say, there you go, our psychological guard dog, who will call bullshit on us if we sound like we're becoming, shall we say, a little self-indulgent in regards to our thinking. So it's also super helpful. Peter's been greatly helpful when we start thinking about using gut instinct and or getting upset or anxious about something. Peter's really helpful about saying, get over yourself and go take a walk, which we love to hear. And so the premise of the show, if you're just pretty new to it, is that Ben and I and our friends used to hang out downstairs at the bar after a typical tough day, and just share ideas and shoot ideas back and forth. And it was, it was something that I think offered us a sense of community. And maybe for a lot of people, we're all out there trading alone all day, that the sense of community is something that you can now be part of vis-a-vis this show. So without further ado, Peter, do you ever trade metals?
No, I don't. So I'm excited to learn from Ben on the metals. I tend to just trade futures, in the indices. So
do you know Peter, do you know anybody who trades metals?
No, but they're a rarefied creature that I've read about. How are they?
They have a way of getting extinct very quickly. So yeah.
And a lot of them, I guess, moved over to the crypto space. And so, Peter, I'm a horrible gold trader, and a lot of the sort of the lessons that Ben teaches are great. Ben, for example, once said to me, he came over and he said, I wanted to do something, and he said, never ever be in a rush when you're trading gold. And then more recently, he said, you say it, I think, Ben, you say something like the best way to trade gold is to not trade gold.
Yeah, that's what I was saying. Peter's already ahead of the pack. If he hasn't traded it, he's doing great.
Right.
It's just for a layperson like myself, it's such a gappy instrument that, it's like a position trade. So I feel like once you're locked into a specific perspective, or you have like a strategy, you got to, give us like
it's
the
tricky.
overview.
It's tricky. One of the things I always said back when I used to look at the commitment of traders is that the metals markets is it's one of those markets where the dealers are always right, and that's not usually a good thing. But in terms of positioning, right, that's where you'd actually want to be looking to what they were doing. And I always felt that there was sort of this shift, but the information flow being down on the floor, I think that's the thing that really changed, right? The gold market, there are always going to be people who have information that we mere locals would not. But 10, 20 years ago, there was enough edge before, I'd say maybe 2013, when it really started to pick up, where the electronic trading picked up. Before that, there was enough edge and information flow because so much went to the pit. So you could be a trader, make a good living, even with a much shorter day, without the overnights of electronic trading, because it was the place that everyone went for liquidity. I think for me personally, why am I mentioning that so early, is I think as gold became electronic and more efficient, a lot of the information flow, which I think was very helpful to the options traders from longer ago. Just that edge went away. And then the markets get tighter, of course, the fees don't really go down, and it makes it a tough slog. But to your point about the positions, I mean, I feel like that's kind of what I took away. If I had to look back, I traded for about 4 or 5 years, my own book, and you could probably count on 2 hands, days where I, in total, if you sum them up, I probably made 70% of my profits in 10 days over those 6 years or 4 or 5 years. And I think a lot of that is where the options do get interesting is when you can find a setup that, the options don't reflect in the way they're priced in that seems really good. Like there are situations there with gold where it becomes very interesting, or any of the metals. But I would caution people, if you're thinking about day in, day out, I'm going to trade this market and win. I think you really need to be careful and be selective before you chop yourself up.
Hey, Ben, tell Peter what the hours in the pit were before there were electronic markets.
I think the gold, so gold open and close was, I think, 820 and 125, is it? What was it?
Yeah, 130, something like that, right?
130.
How's that for hours, Pete? You're done with work at 1:30.
That's sweet. That's like the ideal trading lifestyle. There's a guy I trade with, he just trades, the first half hour of the day, and he walks, and he's always trades flat, walks away. That's like more of a day trader style, but just hearing people down in the pit having a shortened day alleviates some of the anxiety I had about the stories you often tell me about the lifestyle there. The suitcases.
Yep.
full of
right. And so you also remember that gold functioned in a way that crypto does now, right? It was the place for the alternative currencies, so that there was as a gold trader, you were a cooler dude, right? Than they are now. And then how were silver traders perceived?
The ones we knew were all pretty crazy.
Yeah.
When
I first came onto the floor, the silver traders were called the cowboys.
Why is that?
Chris, why was that? Do you remember?
Oh, well, for sure. That it was $50. It was
Oh.
$50 a penny, right? Or something like that in silver, right?
Yes.
And right. And it was more volatile and less liquid, Peter. So of course, there's the Hunt brothers story, right?
Yeah, I think for me, so what was really cool was I was able to, I started clerking on the floor in 2010. So kind of knowing, right, the best days were likely behind, even going in with that anticipation, but I always wanted to trade, and this was where I got my opportunity. So that meant I got to see the metals run of 2011, which, people don't talk about as much as you think about, when you think back about things people talk about, but that was crazy. Silver went in a straight line up to $50. Gold went up to just over 1900 before crashing down to almost 1,000 and then working its way back up. But that time, one of the things that was fun, if you remember, is they had the tablets. People were trading on tablets in the pit, but they were tethered to the internet cables. They had a row where it was tethered, so people couldn't really leave. Like my job as a clerk was setting up their batteries and all that sort of stuff. But the most fun I had was watching the stampedes that would happen, which they then had to tell people to slow down. So you'd have all the silver traders congregated in this small area with their little tablets attached to a small rope, effectively, and a broker would come from the other side of the ring when silver's moving $5-6 in a day, which is insane to think about. And the order would have so much edge in it, the people would take their $1,000, $2,000 tablet, throw it on the ground, run across to get in the face of the guy and get in his eye, and then everyone had to pick up and order new tablets and the whole thing. And that was pretty insane. So I think as much of the career that I had down there was not the most exciting times for the metals market, I am glad that I at least got to, in a way, be a part of that 2011 run, because that was crazy. And silver, gold has made its way all the way back, close, or made its way close back to its all-time high, made a new all-time high, and now is below. Silver has never come close to getting back to 50. We were all trying to get long silver in 2019 and Bitcoin at the same time, and thank God one of them worked out, but kept having to stop out on silver.
Yeah, Peter, my friend Woz, he was a was a clerk, Ben, or a broker?
Yeah, I think he was. Yeah, he was a broker.
And he always used to say you can only buy silver when it was equal to the price of a Big Mac. Like those crypto guys don't have that issue with Bitcoin, right?
No, we got other issues though.
Right. And so Ben, you've moved over to crypto a little bit, right?
Yeah. So currently I'm, working in the space, not as much on the trading side, but doing it. And I think, you think about Bitcoin, my interest in Bitcoin kind of sprung from gold and some of our friends, Ari and Paul, who got into the space. But, the whole idea of Bitcoin, as you mentioned, kind of made more sense to me from the beginning because of gold, even though it has other properties that gold does not. And, I think just generally for people who are coming at it, I think you got to be careful about ascribing too many narratives to the way these things work. Gold and Bitcoin, just the same. Sometimes I am a believer in Bitcoin over the long term. I'm not a maximalist, but I've lost faith in people from all sides. People who are the big believers who were right. Now during this crash, you hear them saying, well, it's not inflation hedge, but here's what it is. It's like, guys, stop. Like it's an asset that's volatile. It gets crushed sometimes, and sometimes you get your face ripped off, but that's the nature of the game. And it's the same thing like with gold. Gold, I would think, and I do think gold is going to perform well over time, despite the fact that Bitcoin and crypto will take some interest away. But I think that gold has been in spots where you have a lot of inflation and rates stayed low. And that should be a perfect environment for gold to just take off, right? As a store of value. Anytime that differential and, you create negative real yields, that's when gold should skyrocket, but it hasn't, right? So, I always just say any of this stuff, go ahead and do it, but don't think that you're going to figure out the key to it and when to pounce on what narrative, because it's really hard. And that's why often when I was trading options, I find myself doing better when I had no idea what was going on in the market, because at least I didn't come with any biases and I just traded the flow,
Hey, Peter, do you own any gold coins?
No, my family does. They're in a safe somewhere, but we do have a little bit of gold. Why do you ask?
I'm just curious. I own some gold coins. I mean, it was part of the sort of the, after the trade center kind of thing, you had to have some gold coins. Ben, you must have some gold coins.
I do have a few gold coins, not anything crazy.
I was actually expecting you, like, as a joke almost, to have this like opulent kind of like Louis the 14th kind of background with like a gold or some hip hop chains or something.
Yeah, I mean, maybe if I had started trading in like 2006, I would. Had I just been able to do 2007 maybe to 2012 instead of 2012 to 2017, I think maybe I would have some more opulent stuff.
Let me ask you both something. Since I'm a newer trader, you both have actually traded in a physical space with others, and something we see a lot, in the Wall Street Jesus Steam room or in the new members room or any other chat room is sort of like the wrathful rebuke the market gives to traders who try to impose their formula on the action for, like, how have you two dealt with that, not only psychologically, but economically over the years? And how do you both see that your trading style be transformed by this subconscious expectation at all times that the market's gonna, do something to prove you wrong?
I'll let you go, Chris.
That's like a long question, but
yeah, it's a great question, Peter. Thank you for asking it. It's and I'll tell you what I see in Ben. How's that? And then Ben can tell me what he sees in me.
Let's objectify Ben.
Yeah, for sure.
Love that.
The metals guy.
And Ben would always say, "Don't be in a hurry." Right? That means that you can't impose. That means that you're respecting the market's time rather than your own. He would also say, that. Right? Isn't that smart? Right? And it's a way that is both humbling and patient. He would also be curious, as though he was always open, as though the idea was to have that neutral mindset, to be like it could do anything. I mean, and that's what we learned on the floor. Like, it could do anything, and it literally does. I mean, it literally does do anything. So, and there's also an upbeat sense of humor about the whole thing, given that you have a choice of being depressed because you can't control it, or you have a choice of actually being, just that, you know, it is what it is, and try and find humor in the fact that you're playing a game that so many people fail and we can't control. And so Ben exhibited a lot of those traits, which always made it nice to talk to him. I just couldn't believe he had a 72-page statement of open positions.
I believe it. They were all, I believe it. But I would say, yeah, I mean, we've talked about this, of course, right? Is this idea of attachment. And I think people who have attachments to an idea, like to me, a red flag of anyone I would never put risk capital behind is someone who says, who feels this need to, you know, show that they're right, right? Because ultimately, as a trader, you're going to be right, you're going to be wrong. It's not about that, really. Like, it's about execution and a little bit of that. But if your mind is focused on, you know, seeing things a certain way, then you will, and it'll cause your mind to stay closed and not recognize other signals that are out there in the market. And I think, you know, one of the some examples of this, like, you know, with my backer and Waz, who you mentioned, Chris, who wasn't trading at the time, but people with market savvy, sometimes, you know, I'd be trading the market 14 hours a day, but I was too close to it to see certain things, you know, that I needed to be able to step away and see. And then you talk to somebody who's been trading the market on and off for 20 years, but hasn't looked at it in 6 months. You explain what's going on and they give you an insight that, you know, just wasn't there for you, right? And I think it's just important to remember that in a given moment, you're going to have blinders on and things like that. And just to always accept that, right? And not have this attitude that you believe that, you know, you're smarter than the market. I like the analogy of, you know, thinking about it as like the ocean, you know, like if you go in and think you're stronger than the ocean, you're going to get crushed. But, you know, occasionally you can see the way a wave comes in and ride a good trade and get out if it doesn't work. And I see the analogy as similar, but if you're approaching it from I know how the market works, I know how the world works, inflation is going to be low, right? I mean, how many times, like I had Rodney, Chris, my friend, Rodney, who used to trade with, said to me, I like this the other day. He said, if I had known the number before, I still would have lost money, right? So like, it's not about, you know, having the information, like this idea, like if I only knew this, then I would get, no, like crazy things happen. The world's irrational, accept that, and then be confident anyway.
Peter, there are so many stories where Ben would have a huge edge, or the ring would have a huge edge on a particular strike in a particular month, as though someone had decided they had an opinion or they needed to put a lot of money bigger than the ring could handle. And then all of a sudden the ring, which would go from having this huge edge to all of a sudden being underwater because that person had such a big position that the ring couldn't necessarily swallow and keep that position in line. So it's interesting to see that emotional transition of like, this is great, to like, oh no, this is now, we all have this problem.
Yeah, and that goes back to what I was saying earlier around the transition from the pit being the source of liquidity to electronic trading taking that away, right? The strength that lied in numbers in the pit when it was full, the whole dynamic changes as that changes.
I mean, I think from a psychological, I work in end of life care frequently as a meditation teacher. And so we're talking about two things that interest me greatly about financial markets. And that's one, they curb self-absorption because you simply cannot be absorbed in your bias and make a living. Not that I've seen successfully. And, you know, this idea that you're fundamentally problematic as a trader, just to Chris's point, it just becomes a distraction. You got to go in there and have sort of like a sense of humor and a lightness about it in order to be successful. So I find it, you know, it's coming from a like strict religious Buddhist meditation background. I find financial markets to be such a refreshing way for practitioners to kind of like overcome self-image and actually deal with the acuteness and pointiness of reality as it presents itself. You don't want to be aggressive towards reality because it will provide you with such a painful rebuke. Basically, sorry to interrupt you, Chris.
Yeah, no, I'm sorry to interrupt you, Peter. Do you think that the fact that we can concentrate on just something like Ben's sheets were 72 pages deep in his position, right? Like you get outside of yourself when you're just trying to drive your position 72 pages worth. Like that.
it's hard to, I mean, what do you think, Ben? What was your state of mind when you're, trying to manage that large of a position and balance out the various, not only opportunities, but, the other participants, the dealers and whomever else?
Sure. I mean, I think I would say first thing's important to understand is I loved doing it. And if you love doing something, I think your ability to attend to it, even through difficult circumstances, is far greater. So that helps, right? If you don't want to trade, or you're like, it sounds interesting, like a decent way to make money, don't do it, right? You got to want to do it.
Yeah.
But I'll tell you, maybe a quick story, maybe two, depending on how long I ramble. But I think I remember my biggest losing day. It was about 3 times what I thought I could lose on a position if it went really poorly, right? And that's the thing that I think catches a lot of people off guard, is they think they know what their maximum loss is, and then they realize they don't. And then when they get into that zone, it can get very scary. So I think, I look at the way I handled that, and it ended up being a great story. I called my backer, who was on the phone in the car with his wife on speaker, yelling, whatever. I'm like, hey, down a lot of money here, I just figure I should let you know. And they're like, basically I put this one trade on and it's gone like this in a way I never knew was possible. And I'm like, what would you do? And he's like, I would take half off and, just come back to it tomorrow. And like, in a moment like that, right? Or take some off, whatever he said. In a moment, again, this is someone who's not watching the market, but psychologically can understand a person in stress approaching a market. And what I did was I did end up taking a bunch off and locking in a loss. And then the next day it went further again. So the ones I took off were good, but my mentality had shifted to like, I just saved myself a bunch of money because I was disciplined there when I could have not been. And it put me into this new zone where like, I was able to kind of go off of a new benchmark and say, okay, like that happened, but now I have a winning trade on that last one. And now I can trade against it. And then you get back and you do you get into a flow, once again with the market. And that's where your focus is. You're no longer hung up on that. I mean, that's takes a lot of practice. It's not easy to do, but I think moments like that where you accept, right? It's acceptance. It's accepting like this happened. I created a disaster, but I can't let this disaster be the defining characteristic of the rest of my trading. I have to call that a loss because there's nothing I can do about it, and just adjust and get to this point. And then I was able to be proud of myself for having the discipline to do that. And then it leads to this weird self-confidence where I'm like, okay, not many people could do that. And then you feel better, and then it just gets you into a better zone.
Trading has a stress inoculation kind of component to it, where over time we get better and better at relating to adverse conditions instead of focusing on the condition. And I think that's like that's the earmark. I think a lot about, like military professionals and pilots and things like that. And they also train in that same kind of like relating to conditions with my body, speech, and mind, instead of like really trying to hone in on, the condition itself, and then making, as Steve Hammer would say, making the right decision at the wrong time, sort of.
Yeah, and it's a lot harder, I would say, like just that example I'm giving you was maybe 2 years after this, but I remember the first time I was down $10,000 in a day. I remember like watching the number. It was a similar thing, something I didn't think that could happen, and then it just did. And it was just, but this was like, I was still a younger trader. So this was like, geez, $10,000 here. This is not good at all. And I remember like there being a distinct difference between the way I felt physically when it said like 9,800. And then when I saw the 10,000 number, it was just like this next digit just makes it feel so big. And it totally was like physically eating me alive while it was happening, because it wasn't something I could trade out of. It was just, they just handed it to me,
Right.
So, that is like, to your point, like, I think in terms of learning to relate to things, like it's a process that takes years of going through painful moments, and then you learn how to adjust to it. And then, okay, next time you get there, hey, I've done this before, and it doesn't create the same level of, stress that is going to overcome you, but it's a process.
Last time I saw Chris Cady on this program, we both, I don't know if you got shredded, but I was trapped short. It was after the Fed. Do you remember that? Late May, I think the Fed chairman spoke. And I remember you got on the webinar and you were like visibly shaken from this like algo rip, to the upside. And we were both trying to keep our shit together. And by the end of the program, we were just so enmeshed and having a good time on the happy hour that,
Yeah, and you can see us laughing now. Even Ben is laughing about right the futility of the emotional attachment to the outcome, because you're doing your best, right? We're doing our best, right? And so if you're doing your best and you're a professional, right? We mitigate our risks. We act in terms of probability. We ask our friends, we look around, we see people who blow up. We don't do that. We're all, all of us here are pros. So, and you're talking about the pilots and things like that, but I think trading is traumatizing.
Oh yeah, definitely. Or it triggers, if you have traumatic organization in the first place, it's going to trigger that. And then you're going to have to consciously work with it instead of it operating sort of under the level at all times. And so a lot of maybe people who come to me to learn meditation or whatever, who work in financial markets, that unconscious traumatic organization has been not only driving them to get into financial markets because it is such a volatile environment that may mirror things that they experienced as a child, but also it's an opportunity to bring it into conscious, workable form, through position size, risk management, and stuff like that. But
do you hear, time out just for a sec, Ben? Do you see the difference between how you didn't freeze when you had that big loss, right? So that was fear-based, where deer in the headlights is more anxiety-based. So as traders, when we're afraid, we act, right? And so, right, that's good, right? When I blew up, when I blew out, I went right up to George's office at TNS, and he was like, go make it back. But so there's a difference, right, Peter? Like fear as a motivator, and when we're having a loss to get us away from the bad things, or at least mitigate them, and anxiety, or the deer in the headlights, right, Ben? We've seen that, right? So many people on the floor.
Yeah, for sure. I mean, you have, and I think that also revolves, around, just like in any kind of organization, like having a support network around you, right? And that's where there's benefits. Like I felt, like I said, like, my back was like, okay, like at this point I had his confidence, right? And whereas at earlier stages I was being tested, so screwing up there, I'm like worried that guy's going to get upset, whereas knowing I have someone's confidence in me helps me find my own. So I think there's that difference too. And I would say, like, this is also just naturally a part of life. I mean, I speak about it in more optimistic terms now, personally. I think everybody would be better off if they tried trading, even a very small book, in their young late mid-teens, even whenever you want to. It doesn't have to be a lot of money, but everybody should, put on positions and think about why they're doing it and learn that way. I think it's an important piece. And I get upset, I see like this idea of, in markets, we talk about protecting of retail traders, and there needs to be protections, especially if you're talking about scams that exist in DeFi world or things like that. But, when you're talking about trading, people have the right to open an account, and there's all this focus on, how do we protect? Like, look, the focus should be on recognizing that this is actually a tremendous, like when, Robinhood and all these people came to Wall Street Bets, like I see this as a wonderful thing in the big picture, because even the people who get hurt, and those are all terrible stories, they learn, they understand what a market is. Now people know it's not weird for a 15-year-old walking down the street to know what a short squeeze is, right? And in that process, you're also thinking about, you're taking losses and you're going through things. And I do feel terrible, of course, and some people do it too large, etc. And everyone's going to take losses at some point. But I actually think it's great to get that education, because I think, sometimes, my view is, like, friends who've been in jobs that are very stable on teams that deliver, and like that's what they always see. they get this idea that like that's because of a brilliance. They don't recognize the edge that their organization has in a market or something like that. Whereas for me, every time I go into any situation, I think I'm better equipped because I'm just expecting problems, but not in such a way that it will stop me from making progress.
I mean, I think financial markets for young people are an initiatory experience into like the Darwinian nature of like economics, personally, even managing their own money. And I wish I had started when I was much younger, because I think would have solved a lot of problems around, how money works, how it flows through the market, that there's always more of it, things like that. Working from choice instead of compulsion with money, credit cards when I was a kid and stuff like that. So I totally agree. You're going into another story though, and I totally derailed you, so I apologize.
Think about, hey, Peter, think about for the young, and to Ben's point too, think about the pure clutch now. Kids know, right? Kids know that they can't put the money in the bank. They're not going to be able to get 7% on their 401k. They know they've got a 25-year window of earnings, and they know they have to learn to trade. That will be the thing that separates them when they get to be our age and are looking at their net savings or at least their net worth in return in regards to their returns during their working years. So trading as a skill is, especially since we're not getting anywhere near real rates at the bank. I think, yeah, like we all say, it's initiatory, I think, Peter, you said, and Ben, you said, I think it's a good idea, right? And so the average account size, they have 10 million accounts at Robinhood. The average account size is $265.
Oh, interesting.
Yeah, I think a lot of people don't realize that.
Yeah.
And then it's like, yeah, I do feel bad, but if an 18-year-old loses $265, in the scope of world problems,
Right.
that's
I
not the one
definitely,
keeping me up.
I did on my first trade. I bought the Dow at like 800 and sold it at 600 in 1978. But
so it was initiatory for you. It's like getting laid the first time or something like that.
Yeah,
exactly what happened.
For real. I mean, there are some very funny stories from the days in the pit where. Ben, do you remember that? Ben, you must know the story where all those silver traders sold those nickel call or those penny calls over Easter, over Good Friday.
Is that the one where they needed to though? Yes, because I think some crazy thing where we had to get delivery through a Chinese bank or something insane happened. Yeah, I heard about this.
Yeah, do you know that story?
I don't know how to tell it, but I know that colleagues of mine lived it. And I think one of them, it was their anniversary and they didn't make it home for their anniversary because of it. That's what I know.
Yeah. I mean, Peter, it was Friday before Easter or Thursday before Easter, right? Because the exchanges were closed in the United States on Good Friday. And so it was a 4-day weekend because of Easter Monday in Europe. And so I believe it was silver was trading 18 and everybody sold the 19 or the 1870 and everybody sold the 19 calls for a tick. Like tens of thousands of them. And then the market closed and someone exercised all the calls. They can do that, right, Ben? They can exercise the calls out of the money.
Correct. Something like that.
And the first print in Hong Kong, everybody was waiting for the first print and it was like up $1.
Yeah, it was something insane. I don't remember. It might have even been a bigger move than that, if I'm remembering correctly. But it was insane.
Right. And so Peter, the hijinks, right? Everybody thinks it's a level playing field.
No, yeah. Or I'm learning to understand it is absolutely not the games that are played at, the higher levels. And I'm just a victim in many cases of whatever's going on.
But the fact that we're aware of it doesn't, allows us to not be the victim, right? Like if it's too good, how's this the lesson, right? If it's too good to be true.
Yeah.
But that's the thing that I love so much about where I sit now versus where I did then when I was managing that book, right? Because I mean, I'm really not doing much now, trading wise. At the moment, I have what I have and I'm holding it. But I mean, after post COVID, I did a fair bit of trading for on and off for a year or whatever it was. And, you know, in those spots, what I love so much now, right? Like if you're trying to get in front of a move or you see a setup that you really like, right? And you want to play it with options or whatever, it doesn't matter. The markets are tight enough that you can lift the offer, hit the bid, whatever. If this is a trade you're looking to hold for a few days, like the price at the market doesn't matter. That's another thing I feel gets underappreciated is how good retail traders have it, in the sense of there's a very tight market on options across all these equities, everything out there. So that's awesome. So I now, you know, as a trader professionally, you had, and this goes back to not being in a rush, right? As a trader professionally, I couldn't have 3 months of no P&L. It happened a couple times and it was always bad because 3 months of no P&L is 3 months of losing a lot when you factor in, you know, the expenses for your software and your this and your that and everything like that.
Hey,
So
what was,
now I
Ben,
get the
what was,
benefit of,
time out, what was your overhead?
so my setup was, you know, I kept 50% of profits. And I'd say my overhead, depending on when, was probably over $10,000 a month. And that's before any brokerage costs, of which I paid, you know, in 2016, close to $700,000 and that. So, you know, the numbers get up there really fast and you realize that you're making the exchange a lot more money than you're making
Right.
yourself and all the vendors. So at least, I guess at least people like me, I helped fund a few people's lifestyles. But I think the takeaway I was going to say, Chris, is just that I love it now because I can sit back and I can look at a chart and I can wait for all the confirmations in the world I want to see. I can look till the setup is just perfect. I can do that across all these assets. And, you know, most of the time I can just leave my money in the S&P 500 and just hang out and be willing to take that long term. But then when I see something pop up, it's so easy just to step in and do a trade, no overhead. It's wonderful. And that's great because you don't want to be in a rush, right? You want to be, for me, that's my big takeaway, Peter, is like, if you can get to a point, you know, Chris said sense of humor or whatever, but that I agree. Like, if you can just get to a point where you're easygoing, like, yeah, why wouldn't I do this? Like those are the trades I put on now where I'm just like, if it doesn't work, it doesn't work. I love the setup. I'm done. And that's it. I love that. Such a better way to be than it was having to trade every single day.
Right. More of I'm presuming that it was more of a, maybe who you know, like a more of a networking scene to get into a trade. The spreads were probably ridiculous.
Not in my time, they weren't.
No.
They were pretty
weren't?
tight.
Okay.
Chris could tell you about that, but that's before my time.
I gotcha.
Is that right, Chris? You've probably seen some bid ass you could drive a truck through.
Yeah, in the 87 crash, right? It was 10 handles wide in the spoos. You could buy them on the bid and sell them on the offer.
Amazing.
So, I mean, yeah, that was, but you know, never again. So what were you running? You were running Option City, you were paying brokerage, you had your seat. Did you had to pay the seat lease?
My company had the seat lease. I did need to have a little bit of physical space. So part of that, which was not as cheap as it was at the end, part of the way through. So there was that, there was the office. That was a thing before working from home became a thing.
Right.
I also paid for Wentech, now ICE Options Analytics. I probably could have gotten rid of that, but you know how it is, especially with trading, right? If you have a couple tools and they just become part of your process, that's hard to take out because it seems like you're saving money, but you could be screwing things up and create more problems. And you're always afraid to take things out. So that was part of it. But then also we had a clerk, right? So we had to pay the clerk salary.
Mm-hmm.
And yeah, that became it.
Was it easier to get into trades or out of trades?
It's a hard question. I don't know. Again, it's easier to get into trades. I mean, but I guess in the end, you get out of. It's never that hard to get into a trade. It can be really hard to get out of a trade. That's the way I always felt. I don't know. What do you think?
I want to know Peter's experience with people who are at their end of the life, and that is that relevant?
I didn't see that coming. You want to
market
know?
will, market will whip you around. Chris will catch you off guard. You got to be paying attention.
Right, Peter? Like, do people at the end of their life, is it like they're getting out of a trade, or is it just that they're going to get stopped out, or is it they just realize that the game is over?
I mean, it depends on how absorbed they are in their capacity for open experiencing, right? That's really what it comes down to. When we're as traders, we're talking a lot about anxiety, and anxiety is the neurotic interpretation of uncertainty or openness, right? So when I start working with a client, whether it's a meditation student who's a trader or someone who's at the end of their life, we work in the realm of what you and I know as bardo,
Hmm.
sort of like what kind of compulsive habits do you have to find familiarity, and how much capacity do you have for the intensity of not knowing who you are in a specific instance. And the people that get more and more comfortable towards the end of life, they're less inclined to be stopped out by life and more interested in what's going to happen when they throw off the sheath of sort of like self-absorption, dissociation. They're sort of like more interested in what is awareness. So that's the trade, is like for end of life, is what is awareness? What is it that's aware? And then what is the kind of like content that seems to come and go, which is the price action. The price action's always coming and going. How am I relating to it is one way of doing it that has less friction. And then more friction is like, what are the circumstances, and that egotistical clinging of like trying to solve the issue, which actually just makes people more unhealthy. So that's sort of the nature of the trade. So when we're trading, we're looking at content, which is price action.
Right.
Yeah. And we're trying to stay open or unbiased and work with what's arising. And instead of sort of being reacting to like more primitive drives, which are survival focused.
What
That's one way to look. I've just made all that up.
Yeah, I
It
mean,
was pretty good.
yeah, what's a
Pretty good.
track record of hunches? Like people have intuitions, or they always say, I've got a gut feel. What do you figure the track record of that
Well,
is?
statistically, your gut feelings are more accurate if they're negative. That like gut feelings or intuitions or portentous dreams are often focused through the lens of survival. So you're more likely to have success saying like, I should not get on this airplane. That might be a valid, you need to examine that. Or if you have a dream of a car crash, that's more likely to occur than you dreaming that a Lamborghini arrives at your front door and all of a sudden you're a millionaire. That doesn't serve any survival function, right?
Yeah.
Like success, but the biological system's set up to warn you. So I would say it's sort of counterintuitive. That's where you and I wrestle a little bit. It's sort of like with trading, the judgment for me is still out on like, if we have a hunch, is that valuable? I don't know. You two would know better than I do. You're more successful traders than I am. So
Ben,
what do you think?
yeah, we'll let Ben. Ben, any hunches? You didn't really trade by hunch, did you?
I did, for sure. I mean, generally no, but yeah, no, I was, there were times, and I'd say hunch, these are all kind of hard to say, like nondescript terms, right?
Yeah.
But let's just say that there are conditions that you feel that I can't tie a rational story to, but they tell me that I should change what I'm doing, and I listen.
Right.
So there were definitely a few times where, and it's from going through losses and scenarios that feel similar, right? Where it's like, different times, like I have this position on, it's working. It's just like, take it off and flip it if you really want to make money, because there's just something going on. Like I can think about times where I've completely changed my position in 30 seconds. I take a big position one way and flip it the other. I didn't do it often, but I would do it if the quote unquote hunch was there. I mean, I think back, Malcolm Gladwell's in the news for upsetting everybody about saying working from home is a bad idea or whatever. But in his book Blink, he talked about, right, these experiments where they basically ask people, they watch people's behavior in a card game that's biased, where certain cards create a bad outcome, right? They watch their behavior and then they compare that to their ability to speak to what's going on. And the conclusion from that, which I've heard replicated elsewhere, is that you are actually able to not only subconsciously internalize something, but actually act before you might even rationally be aware of it.
Right.
So because of that, that kind of informs my view that a lot of our intelligence or awareness is taking place at a subconscious level. And occasionally there are ways to kind of tap into that. But it's hard to know when. That's the whole trick, right?
Have
Right.
you ever been riding your bike and closed your eye before the bug goes in your eyeball?
Exactly.
No,
That's
that-
amazing though.
Yeah,
If you
that's a
think
good one.
about it, that's incredible. That means somewhere in your like in the central processing unit of the mind, like it saw that and it didn't even filter into conscious awareness. You just
Right. Like
react.
if you put your hand in hot water, right, it's not going to go all the way up to the brain. The message is going to go to the spine. You're going to pull it and then it goes up to the brain after the fact.
Yeah. So
Same
I agree.
idea.
I agree with that assessment about brain, like I don't even know if it would be called subconscious, but we're talking about like as you become a more experienced trader, your filtration process should like open up to let the validated dope kind of arise into conscious awareness where you can act on it.
Yeah.
That's
And
something that you can't like, you have to train in that. You can't just, be that way, I don't think.
well, I was going to say the one example that comes to mind is as I'm trying to like remember some of these scenarios, right? Imagine like before the floor got quiet towards the end of the traditional floor that was there, right? There were people, there was yelling, there was shouting, there was everything. So I'm sitting there, but things like that you might not be like sitting there thinking, okay, it's getting louder, it's getting quieter, people seem distracted, right? But ultimately, if a market is a function of the decisions that people are making around you, like those cues might combined together start to mean something and help shape a picture. And then over in the market, I see something, I'm like, that's weird. Okay, I won't think, but then kind of like a multi-factor, you just feel these different things and see these different things. And together they're telling you something that you can't put your mind around completely, but you're just like, okay, I'll act that way. But it also, I think as a trader, it's easier to do that because you're constantly taking risk no matter what you do. And you know that. So the idea of, flipping on a dime doesn't seem as crazy as it might to a normal person who'd be kind of scared to make any decision at all.
Right.
Wow, that's so good. That's so good. Peter, what's the hardest thing for you to do in trading these days?
I just had the hardest time getting bullish on this market after things kind of turned around. It was like this really strong bias built around the noise in the market. You know what I mean? It's sort of like so much bearishness. I listen to Wall Street Jesus religiously, and I hear all this, kind of like macro talk about the negative fundamentals of the economy and things like that. And sort of like, as a newer trader, that stuff works on you and you're not, then I start dissociating again, into like strategies that have nothing to do with what's right in front of me. And you start trying to avoid a loss instead of accept a gain. So I think that's an area I'm currently working on, is stop this kind of like foolish game of trying to avoid a loss and risk markets.
So how do you know when it's a risk market?
I don't know. How do you know?
That's the question, right?
Right.
And that gets back to what I think I was saying earlier about being careful not to buy into my own narrative too much or try and be right, because I don't know. Chris, what do you think?
I think you're the person to answer this. I've seen you do this for years, where you would say, I'm reflecting my opinion here, but you had the ability to switch it up really quickly. And generally speaking, you never got trapped into the external narrative that was floating around.
Generally, I can't say that never happens.
Right.
But generally, but I think, I think I think as I think about just like this market, or even just think about like Peter, just like I've heard that before from people. And here's what I would put to you to just think about differently. I heard that, Chris, we talked about constantly with zero hedge, right? And all those years,
Oh,
everybody
yeah,
on the
right,
floor was reading zero hedge.
right.
And we came up with the rule that there was, what was our rule, Chris? Do you remember?
Yes, you could not read or act on any zero hedge article content while at work. You were
Correct, right? Because
forbidden.
everyone's just going to be so bearish, sell all your stocks, sell everything, buy all the gold,
Right,
and then that's it. And if that works, you win. But guess what? Gold wasn't doing that well, and stocks wouldn't stop going up for
right,
years on end.
right.
So, there was like that's the challenge. And then there's also, like, you see it in markets. And today actually kind of surprised me that the inflation number led to such a rally. I might have actually thought it would have even sold off, even though that might sound strange, because that just it depends on what kind of regime you're in, right? Some people could interpret that, as I read here, Neil Kashkari says recession risk won't stop Fed fighting inflation. So some people would say, okay, strong job number, less inflation. I don't know. Maybe they should keep raising rates. Maybe it's okay to get to a better kind of equilibrium. So there are markets where bad news is good news, especially where, you hear these negative fundamentals, but really what that means is the market's going to price in the next 6 months when you're going to have a more accommodative monetary policy. And if you try and pick your spots and be right in that regime, you're going to lose money and be upset. So I personally just try my best to, avoid at all costs.
So Peter, I think Ben is saying that no matter what we read or the actors associated with the ever narrative associated with the price action, I think Ben's was always like, your job is to be right as a trader first, and to be curious about it and not get wrapped into any particular, don't be affected by the consensus view. Is that right, Ben?
I think so. Well, I think I'll give you an example. I'm going to share my screen if that's okay.
Yeah,
please.
Can you guys see my screen, this chart here?
yep.
Okay, cool. So certainly no, to anyone watching, no, please don't take this as financial advice or anything like that. This is purely for educational reasons.
We would never have this at the bar, but this is very cool.
Yeah, so like for me, and this is kind of, it's not the greatest chart in the world, I apologize, but this is a stock I watch, Virtu Financial, very closely. It's a holding of mine. I'm a big believer in the company, but it's my biggest holding. It's something I've watched. I would argue I watch the stock more than anybody out there who isn't, a senior member of that company. So what do I know about this stock in the past, right? This is, again, getting to this idea for me of wanting to try to think about scenarios where there are enough things in my favor from a risk perspective that I like to make the bet from a risk reward probabilistic standpoint, but I can't have conviction ever, right? That the news means this or this means this. So what I did recently, this trade that I put on, you could see this downtrend that was tracking very well, where effectively every time it came to the line, it sold off. And I had this in place, and then it reacted and it was working. And what you don't see on this chart, but if you look out a little wider, you see this line here, basically where it came to and ended up being the low just about a month ago, was major resistance and then major support for basically the last 2 years. Okay, so it's coming into that price level. And I also knew that you had this downtrend. I also knew that these options, they had earnings coming out. No reason, everything been going well with the company. But what I've seen on earnings announcements in the past, again, I'm not making a call on the market, but I've seen that earnings with this particular stock, it's statistically significant how often it will be the start or the end of a new downtrend. Similar to things you see with the Fed and gold, right? Often, maybe not right away, but in the next week or so, trends can establish in the other direction. So my point is, and this trade, by the way, is now flat. I was up big on it, but it's stalling, but that's not really the point. The point is that I bought these calls a month out because I saw a scenario where I said, look, if this line breaks to the upside, then I don't think there's any resistance, for a significant amount of time. And because of that, with an option, I can get the potential for it to run and make a multiple quickly, right? Okay, why do I think it's going to break this? Well, there are two reasons. There's a major support here that's getting challenged for the first time. And I think their earnings will probably be okay. And even if they're decent, maybe it leads to a short covering rally or something like that. And I just don't see a spot where people are going to want to get short around that level. So I think it could carry. So only reason I put that out there, and by the way, a lot of people might not see what I'm looking at as a valid way of looking at stocks, including Chris potentially.
Yep.
But this is how I've kind of view things in my own mind frame, and they've worked for me over time. So I stick with what works. But my point is, even in doing so, I'm approaching the market completely from I want to see things line up that I think favor this trade, and doing this broad analysis, like these are the things I see, but I'm never saying I'm going to bet the market says they're going to do 72 cents in earnings. I'm saying they're going to do 85 and they're going to blow it out of the water. That's never the way I'm going into it. I'm never saying like the Fed is going to do this and trick everyone. And I know that I'm never doing that. I'm going into it saying, these are the levels that matter to me. This is what I've seen in the price action. Lately, specifically, I think you have to factor in sentiment. Sentiment has been so negative. And I think that's part of what's fueled this rally, is that when you have a market where there's just so much negativity, it doesn't take that much to be good for everyone to have to flow in the other direction. So while I know, Chris, you may be skeptical of my little analysis there, I think I want to still make the point.
It all makes sense to me.
Yeah, Peter, all the people who've been buying the dip for the last 10 years have that bias, right?
Seems that way.
Right.
How are you positioned before CPI today, Chris? But just out of curiosity, in ES, were you?
I had been buying premium, and I blew out the downside puts into a spread. I wanted to get short. I think the maxed upside potential for the bear case is right here at 42.10, and it's not because of a 50% retracement, which is at 42.20. So I think that if they hold 42.10, or they find sellers coincidentally at 42.20, which is just right above here, is 50% of the whole drop. I think that you could get a vertical move to the downside that surprises both in magnitude and size. I see we've arrived at a point of balance, and from balance points we get vertical moves, as Ben knows. So I'm buying October premium here because the VIX is 10% from its 10-day moving average. So I figure the risk on owning October premium, if I'm wrong, is small enough that I can get out of the trade without getting blasted. And then I'm scalping from the short side, hoping to catch a break and pay for the October premium. And if it goes up from here, I'm not going to fight it. I'll blow out my October premium. But I wanted to touch on the fact that everybody has confirmation bias, and most of those people, a large amount of the people in the past 10 years have made a career on buying the dip in the market. So their self-esteem is tied to, and their financial well-being is tied to this bias of buying the dip, right? There's a large pool of those people. And apparently I was listening to people talk about how do we deal with confirmation bias, the understanding that if someone believes the world is flat, we can't tell them that the world is round. They'll just revert back to their belief in the world is flat. We literally have to agree with them and say, yes, let's go to the edge of the world where it's flat together, right? The only way that we can actually affect change is with confirmation bias, is to actually agree with the bias so that the person then can eventually see the absurdity of their bias. But the market doesn't afford people that ability, right? So what does price do, right? Price is the best marketing tool for more money to be allocated to something. So in a sense, if people have this bias, and the market rallying is just essentially, and we know that successful social behavior is contagious. So the market is essentially appealing to all the people, apparently a very large group of people, especially with stocks down 30%, who will feel as though this is their reason for life. This is the way that they've made it. This is their career risk, even portfolio managers, right? They all need to be in on this dip. And then as we were saying, right? The price is, how is price marketing itself? Price, well, why'd you buy it? The price is going up. So you have the confirmation bias. You have the understanding that price is drawing in people with this confirmation bias. And we have a large pool of people who have bought the dip, all the way down to career risk for portfolio managers. And
Yeah,
then
and
you,
that same principle could have, when you were starting to talk about that, I was thinking about the original run up to 60,000 in Bitcoin, where you saw exactly that, where price was the greatest marketer of more allocated money because people saw it going, they said, I need to get in. And then there's the FOMO cycle. And then you
right,
mentioned the idea of like I don't know, I forget the word you used, but right, there was like a cultural thing behind Wall Street bets and everything like that. So there
right.
really were all those components that you talk about. I just want to highlight one thing you said, Chris, because especially when I hear people like you've been doing it for a long time say things that I look for, I think it's worth highlighting. It might have been quick, but you said, we know that out of points of balance come vertical moves in either direction.
Right.
And I think this, I was talking about those spots where I would look for what I thought was a great setup in gold that I would try to take advantage of, do a little, my chart voodoo, put some lines that don't mean anything. But after that, I think there's something people have to understand about that. And actually, since we're doing it, I might as well share one more time and just look at gold quickly here, and look at gold on like a 20-year, even do longer, and just look at it like this, from basically 2007, 2008, went up in 2011, like I mentioned earlier. And then you've basically it's just kind of gone down and slowly picked up buyers, come back. And now it's kind of chilling. You see, it's kind of making, you call it a cup and a handle or whatever, but right,
Yeah.
it's this idea of consolidation on the longer chart after, at this very critical point, which was the high that was made all time then, and then basically the equivalent level slightly higher after COVID. And now it's kind of right there, not falling apart and consolidating. So I see it in gold, which is why I thought that was kind of worth mentioning, but that's on a longer term chart, right? So that doesn't mean anything for today, tomorrow, or next month, but longer term, I think that's interesting to note. But B, what's cool from the options perspective is what can happen, and this is again where you're not in a rush, and sometimes things just get so ridiculous while all your friends have put this trade on, 2 weeks ago and are choking on it. You can get in while they're all forced to stop out, right?
Yeah.
And this is one of those spots where it can really work well with the options, because what happens when the computers are pricing the options is they're going to price it based on daily movement, right? So you can have this period of time where your daily movement gets consolidated down, 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 down. So the options get priced less and less. But if you get any sort of sign that you could be tilting up or down, and any reason to believe that it could be going one way or the other, then at that moment, the options are as cheap as they get right before they're as good as they get. So those are the kind of setups you look for, and you're never going to get it right. But the great thing about, perfect, but the great thing about options, at least, is the max you could lose is the premium you spend if you're just going long. So at least you can cap your risk. And that's why I said it's easy for me to find a spot like that, put a bet on, and say, if it doesn't work, it doesn't work. I'm not going to get emotionally involved in it and just leave it alone.
Peter, you hear that, right? Options are priced on daily price action, but the larger structure behind the daily price action may not be reflected in the current price of the levered options bets.
Yep.
Makes sense. So
right?
range compression creates a more like cheaper pricing. Is that inaccurate?
On the option side, right?
On the option side,
basically, yeah. Right. And if not, an option only makes sense, and out of the money option's only worth something if it can move, right? If the underlying's moving, if the underlying's never moving, and out of the money option's never worth anything. So then from there, the question is, how do you price it? Well, if you expect a lot of movement, then the price of those options has to be high. If you expect only a little movement, then the prices should be low. But what Chris is highlighting, right, is that you can have expectation of large moves at a very small, tight bands. And it makes sense. I mean, at least the way, Chris, maybe you could say it differently, but the way I think about it is an equilibrium is kind of a place where buyers and sellers are comfortable for some period of time. And then when one wins out, like, let's just imagine I'm a seller at 1900 gold and then it goes to 2000, right? And you're looking at this chart, like, you don't want to just keep offering all the way up. You're going to pull back your offers, and that's what creates the potential for larger moves in either direction. Is that fair, Chris? Way of saying it?
Yeah, that's great. Peter, do you understand?
I do. Don't quiz me on it though.
No, I won't. And so for Ben, for people who want to trade gold, what are the rules, right? Never be in a rush.
Never be in a rush.
Try not to trade it.
You try not to trade it.
Right.
I think, you know, there will be regimes as close to pay. It's important to pay attention to gold because we've seen, right, recently, even though people like to highlight similarities in like gold and Bitcoin in their concepts, from a trading perspective, they were very different. Gold could perform in a risk-off environment, whereas Bitcoin could not, right? Bitcoin has not shown the ability to rally against stocks for the last couple of years. It has at times for short periods of time, but lately it hasn't, whereas gold has. So I think you want to pay attention to that, right? Like if you're in a risk-off mode, but you know, you like the chart and you find your reasons, you can look at gold, but then also don't fall in love with that narrative, because gold does not have to be anything, but it doesn't have to be like, I've seen people say, well, gold is inverse S&P play. On the night of the election of 2016, it was 100% inverse S&P. 4 days later, they're, you know, after time, that breaks down and it's not the same. So you have these regimes for a period of time where it is that, but it doesn't remain that. And I think, again, rule for gold, but rule for Bitcoin, rule for anything you're trading. If you're putting the trade on, this goes back to what you're saying, Peter, about hearing the negativity. If you're putting the trade on because you're hearing out here that this is going to be a good or a bad environment for inflation or something, and I think that this product trades like that and that, just be very careful, because you're probably dealing with information that's already been reflected in the market and coming to it late. So be extra careful.
Okay. Excellent
Brilliant.
advice. I feel like the luckiest person on earth right now. Two great traders. That's something I think about a lot in you know, for someone who's newer to the markets, is like finding mentors. And a lot of what I'm hearing from both of you, you know, you have validated strategies based on experience, but you also have this sort of don't rush, you know what I mean? And I think one of the negatives of the convenience of the current marketplace is over trading and just trying stuff out, and you know, that dying of 1,000 paper cuts kind of thing that happens a lot to retail traders. I went through a period where that was happening to me. It's not an issue anymore, but finding mentors that also don't have a bias, that know how to trade, that aren't just sort of like aiming to be the next CNBC god or something like that. So that's hard to find.
Ben, were you ever on CNBC on the floor?
I never was. I wanted to be, but I never made it happen.
I saw Tommy Vitt was on there. I mean, they were there. Peter, if you were on the floor, they would have chosen you to be the CNBC person.
Me?
Yeah.
I'm like talking about, you know, like death care on CNBC. The bearish environment of living.
Right. You know, right? As an option, you have a limited time window. You expire. Final words, Mr. Ben. We've been on this for an hour and a half. We'll lose people if we're much longer.
No worries. Final words. These are exciting times in a lot of ways. I think, you know, it's easy to see the negative, but I think we're out of the world that I think we were in maybe, I don't know, 2010 to 2015, 17, depending on when you think, where, you know, the Fed put comes in and buys things up. I think it's important for people to understand that this environment, which I prefer more from a trading perspective, is one where, to your point earlier, Chris, you said, I think there's a downside move that could happen, you know, faster than anybody expects, right?
Yeah.
I never heard you say those things in 2014, you know, 2015, because the regime was completely different. Mm-hmm. So you always have to be thinking about those things and recognize that the nature of the structure of things right now allows for more volatility generally, just as a general principle, than the nature of things prior. So hopefully that's a good thing for trading. but you know, balance your bets, always have a little dry powder. And if everybody hates a trade, it's probably good to do the opposite.
Yeah, definitely. Peter, any final words?
I have no final words. If you're stressed out, look at the sky. I would say that. Don't get absorbed in your narratives and the paper tiger, because the cognitive effect of being absorbed in a negative narrative would be personal survival, which then drives behaviors that are going to counter your ability to trade well, especially in a retail environment where you don't have, you know, like a staff of researchers and quants and, you know, people supporting your daily activities. So I would just say, you know, really take good care of yourself, drink water, don't get super high on caffeine while you're trading, and be rigorous about sleep and things like that. And you're going to find a lot more success as a retail trader, as a junior trader. And many of us are lucky enough to have access to people like the both of you to hone our skills and also to work with our, you know, psychological vulnerabilities. And that doesn't only help us economically, that helps us have better relationships out in the world, which then helps us become better traders. So I think those are the things that go through my mind when I'm training people in meditation or in hospice care, things like that. You know, we often think about meditation as some sort of like spiritual journey, but a lot of it's just learning to work as an embodied, vulnerable, kind person in the world and doing the best you can and having like some perspective about our importance in the grand scheme of things. I guess I did have things to say. That's all.
Yeah, look at that. Well, thank you for having me on today, Chris. And
Yeah, thank
Peter, really
everybody
nice
for
meeting you.
coming
It's a
to
lot of fun.
Misfits. These guys are my friends.
Nice to meet you, Ben.
And hopefully everybody, the offer stands. You can have a beer with Ben or me in New York anytime. And Peter,
Absolutely.
hopefully we'll all have Thanksgiving at your house in Boulder.
Yeah, look me up.
Will do. All right, everybody. Thank you all.
Thank
Talk
you,
to
Ben. I
later.
A lot
appreciate
of fun.
that.
Thank you.
Yep.
Helpful. Bye.